Is the S&P entering a new bullish run? I will do a weekly review of the markets for week ending April 5th, 2019. This is Agustin Hernandez. Before we begin, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on the examination of past price movements and cannot predict the future. Technical charts referenced are subjective. No strategy can ensure success or protect against loss. International markets involve special risks such as currency fluctuation and political instability. These risks are often heightened for investments in emerging markets. International investing may not be suitable for all investors. Investing involves risk, including loss of principal. Sector investing will be subject to greater volatility than investing more broadly across many sectors and companies. On this week's agenda, the S&P is about to challenge the all-time high that was reached in 2018. How are the leading sectors and groups doing? Is the US the only part of the world that is pushing to get into a bullish run? And finally, what does this mean? The S&P continued its recent good run of form. With last week's gain, the S&P is now within earshot from overtaking its all-time highs. Also, the S&P got its 50-day moving average to go above its 200-day moving average. Another positive sign. So for now, price action is looking positive. Looking at the MACD, we see momentum is also positive. The bars turned green last week, and now the key is to sustain this positive momentum. If the MACD can stay positive, then price has a great chance to break through the highs of 2018, and the new bull market may begin. I bring back the software group. This group did struggle last week. It was choppy each day, but that's fine. The key here is that the moving averages are in their proper positions. Also, unlike the S&P, both moving averages are rising, and that is a very strong sign of a leader in the market. Also, look at the lows every time it pulls back ever since price crossed above its 200-day moving average. It has been higher. This is called higher lows. That is a very healthy sign. Even over the last several weeks where price movement has been choppy, it has held to that pattern. Now let's look at its MACD. It confirms the recent choppy price action. Momentum has had a hard time trying to get back to consistent positive moves. As a leader in this recent rally, I'd like to see at least 2 weeks worth of positive momentum. That type of action can help the S&P and other major indices break through the old highs. A new participant in these videos is the Semi-Conductor Index. Part of the tech sector, this group has started to make a charge higher. Over the last couple of weeks, it got its 50-day moving average above its 200-day moving average. Like the software group, the lows are higher after every pullback. Now the next step is to get its 200-day moving average to begin sloping up. Looking at its MACD, we see that momentum is positive. After a brief negative turn, it got back to green. This sector looks strong. Now, if it can get momentum to stay positive for weeks, then we may see more upside price action. Now, moving away from the tech sector, we look at the Medical Equipment Index. This is part of the healthcare sector. Here we see some very good signs. Unlike all the other indices, its 50-day moving average kissed its 200-day moving average, but never fell below it. By the time they met, the recovery rally was already underway. Now we see both moving averages sloping up. This index hit an all-time high several weeks ago. It has pulled back a bit, but for now, it has been a small pullback. Its lows are still higher for now after every pullback. Now this index has grinded despite the MACD being negative. It has been negative for about a month now, but despite that, price has grinded higher. Now because short-term momentum is negative, it has caused a choppy upward move. If momentum can get to green and stay for several weeks, then we may see this index challenge its recent all-time high. Now here we get to see what is happening around other parts of the global stock markets. Now this index includes many of the major European Union countries along with Hong Kong, Japan, and the United Kingdom. Now here we see a very different price chart than what we just saw in the US. One, price is only above its falling 200-day moving average. One positive sign is that price has respected its 50-day moving average ever since it went above it in January. But its 50-day moving average, despite its rise, is still below its 200-day moving average. For now, this index is recovering. After the counter-trend rally of late December and January, we see lots of choppy momentum in the MACD. The choppy momentum has resulted in a choppy price action over the course of the last 2 months. So this index is still in recovery mode, and it still has close to 10% to reach its old high. Our last chart of the week will be another global index. It is the Emerging Market Index. This index will have countries like China and Brazil, lots of the Asian and Latin American markets. Now this index is still in recovery mode, but unlike the EAFE index, we have an index with its 50-day moving average above its falling 200-day moving average. This is an early positive step. We also see very choppy action during its 2 most recent months. But at a minimum, we do see that the highs keep going higher. For an index in recovery, this is a positive sign. A lot of the choppiness in price action can be attributed to the up and down action of its MACD. Once the global recovery surge ended, momentum has struggled to gain positive momentum for a long period of time. This index does have several positive signals, but it is still in recovery mode, and it is about 13% off its highs of 2018. What does this mean? The S&P is very close to ending its recovery and beginning a new bullish run. After the major drawdown from late September to late December, the S&P has closed the gap to its all-time highs. If the S&P can get sectors such as software to get back into positive momentum, then we may finally get out of the recovery mode. There are many positive signs that even when momentum was choppy for the S&P, certain sectors like software, medical equipment, and semiconductors took turns keeping price rising. Now for a healthy bullish run, the S&P and other major U.S. indices will need more sectors and groups to get into positive momentum at the same time. We are so very close. The other parts of the world are recovering. While we went through in October to late December, the rest of the global stock markets began experiencing in the summer of 2018. So it had more damage done, and now they are trying to join the U.S. and attempt to get back to health and begin their bullish runs. It is early for them, but for global equity holders, this is early positive signals. Thank you for viewing my video. Please like and subscribe to my channel for future videos. Also follow me on Twitter at my handle HRSNYC.